Yo, what's going on, believers? Happy Sunday. Happy new week. I was mistaken. I actually thought that this was going to be the beginning of a new month as the week opened, but the beginning of the new month will actually be on Tuesday. So once Monday's daily candle closes at 4 p.m. Central Time, at 5 when the market reopens, that'll be Tuesday's daily candle, but there will also be the beginning of the month of August and all the trading that will follow. So federal funds rate was last week. This week I just pulled it up, and so as far as the US dollar is concerned, I'm seeing some inflation related news. It's been a hot topic. Crude oil is NFP week as well. So I'll try to get majority of what I'm doing this week in the markets done by Wednesday New York session, and then just kind of let the rest of the week do its thing. But to be honest, predominantly Tuesday and Wednesday for me personally. I'm looking to let Monday just kind of provide me with some information to close out the month of July, and then be able to use that for reference for trying to take advantage of opportunities, like I said, from the beginning of August all the way through to the end. But so really just gonna talk about the dollar chart today. It's gonna be a relatively short one. Starting with the monthly chart because that's what's going on here. For me, the dollar is very important because what it's doing will tend to have a huge impact on what other assets are doing. So this is like I call it my right hand man. I'm always keeping this thing marked up and having some sort of a understanding of what is done, where what it's doing now and what it might do, in the near future. And so, as far as the monthly is concerned, if you recall, there is this monthly inefficiency above price, and then there was this monthly inefficiency below price, which has been acting as support so far. If this Monday daily candle is to close above 101.297, then it will officially have acted as support again, this exact level. Yes, the wicks have gotten inside of it this month in particular, all the way through the midpoint, very close to the low end of it. But ultimately, when everything was all said and done, by the end of those months, no candle body was able to close below that level. So still relatively strong in my opinion. So relatively strong support area. And so that is the monthly, ultimately just been in consolidation for the whole year is what the dollar is doing. So could be looked at as bullish retracement continuation. But again, I'm not in the business of picking tops and bottoms, right? So what I will do here just for completeness sake, so come down to this lowest low, right? Just measure out this range here and also taking note of the fact that at that 50% of the range from low to high, it essentially retrace there and look at that's where it's consolidating at. So it could just be accumulation for another run higher. Just keeping that in mind. But I just want to see some confirmation first on like the daily chart, at least breaking some significant resistance before I start to shift my sentiment back to bullish dollar. For now, I'm like neutral, semi bearish still dollar because I still believe that it could dig more into discount before mounting a rally. But so I'll just leave this, but just for this interval. Now looking at the weekly. So the weekly has a little bit more detail. So at some point I was looking at this high to be run out around this area. As you can see, this inefficiency here held strong as a resistance. No candle bodies were able to close inside of it. So rejects lower, clearing all of these lows deeper into the monthly inefficiency. There's this weekly inefficiency which was confirmed the week before last when this candle closed. Then last week traded into the inefficiency, closed at the midpoint of it. So this week is essentially I'm just looking at the several levels. If price is able to get there, how it responds basically to help with my analysis for the rest of the month, like I was mentioning. But so obviously that 101.707 is super important to me on a dollar. That's the midpoint of this weekly inefficiency, and that's exactly where price seems to be attracted to right now. Right, so on a monthly perspective, just keeping that level in mind as well as the high of it, which is 102.226. And then before it gets to the low of it, actually we'll have to engage the high of that monthly inefficiency again. So that 101.297, once again, important level here. And then again, of course, the low of the weekly inefficiency. If it refuses to act as resistance, then of course, right, I will be then looking for it to work its way above here and find some sort of support. Daily chart where it gets a little bit interesting. So the range for July so far, high to low, is measured here. 50% of it, right? So we're able to get there this past week. Retraced, right? Lower into this inefficiency on a daily. Ramped right back up to it. Actually got above it this time on a closing basis. And then on Friday, one more push higher before closing, right back below that midpoint of that weekly inefficiency. So now, as you can see, we've opened up below the midpoint. And as far as, like I said, dollar is concerned, it's in a very sensitive area, in my opinion, because it could either continue lower at this point since it has traded up into the premium of the range from high to low already for the month. And it has been extremely bearish, right? For a while now, so could just be a retracement here before next leg lower. So I got to keep that part of mind, even with this short-term bullishness. And it did, so it violated one resistance so far, which was great. It found support at a expected support. So okay, two green check marks, if you will. And so the next thing to give it that third check for all systems go for at least some sort of a push possibly to take out the July high, right? Is for sure on a weekly basis, right? The inefficiency, like I had already mentioned when I was on a weekly interval. But these breakers here are actually my focal point on the daily chart. So any sort of unwillingness to get above these is going to signify continuation lower, and any sort of willingness to get into and find support within, showing a willingness to break above them, will then lead more to right that potential to run out July's high and possibly even reach over here to June and May's high, which are, this is May's high, then this is June's high, so they're really just what they're apart. And last but not least, I want to drop down to the hourly chart. We'll skip the 8 and the 4 hour. Just drop to the hourly. Like I said, I'm gonna keep this short and sweet. So what I have here on the hourly, everything I just showed you on the monthly, weekly, daily, I have been transposed down to the hourly chart, so I can just have those levels for reference available easily. But also taking into account this high to this low from the retracement right after this push higher. So I have that measured with the Fibonacci, and so I want to see if it has any willingness to work its way into the higher portion or the premium of this range from high to low, and then some sort of continuation lower. And then same thing, right? So before it's able to get into those daily breakers, which are here, first I would need to see it show some willingness to get it above this hourly inefficiency here and disrespect the potential resistance range of the Fibonacci, which are the yellow lines in here. So if it can find its way through all of this, then it can maybe have some sort of a momentum to get to where I would need it to go for me to, like I said, shift my sentiment to short-term bullishness, possibly running out the July high and then reaching over for June and May's highs. And so that is this particular right area and price, but also now taking into account the overall week, last week from low to high. So when that drop down into that daily inefficiency happened. That was here on Thursday early. Nice rally, and this was all after the federal funds rate on Wednesday. So continuation lower at the start of the new day, and then pops higher in the morning session, ultimately going into consolidation, which one more time ran by side before retracing lower into the range to end the week. So the midpoint of that range of the week of last week is actually here, right at that high end of that monthly inefficiency. So a lot of confluence right there at that level. So any move lower first. Now this is the area that's most significant to me, and any coloring outside the line of this level here, obviously looking at that low of the weekly inefficiency. So that's why the dollar is the only thing that I'm going to actually even go over today, is because it's very helpful for my analysis. And so I'm just going to do what makes sense to me. And that means that until I have enough information about what the dollar is most likely going to do next, that's high probability. I'm just going to sit on the sidelines with my hands crossed, observing, yes, taking notes, yes, but no real desire to press any buttons, because I need the sponsorship of the dollar behind my trades for me to qualify them as high probability. Them the only type of trades that I'm supposed to be taking if I'm taking this as serious as I say I am. And so, with that being said, got any questions, comments, concern? Hit that comment section. If you feel like you've been getting some value from the content I've been putting out, leave your boy a like, subscribe, and I'll catch you on the next one. Y'all be safe. Peace.